In this video, I'm going to be walking you through how I picked the stock that made me 130% gain. We actually found this stock in my weekly lessons. I'm also going to be giving free access to some of you lucky individuals to my weekly lessons. So make sure you hang around, hit that like button, and also subscribe. So the stock that we're going to be discussing today is Shopify. You're going to be seeing a video here that I was sent from my student of them banking out of 120% gain on Shopify. You can see them closing the trade, banking it out on a reputable broker, Hargreaves and Lansdowne. And so now we're going to discuss how did me and my hundreds of students go through and analyze this stock? What did we look for? Where was the opportunity? And what was the thought process behind buying Shopify? So overall, we're looking here on the weekly chart of Shopify. You can see the performance all the way back from 2016 up to current day. So you can see the performance all the way down here when Shopify was nailed down at 3.55, okay? So you can see the growth of how the shares have performed over time. And then here we had the COVID drops. This is when the overall market had a strong pullback. Didn't really affect it too much on the greater scheme of things. Obviously you couldn't see into the future at that point, but during COVID, from the highs to the low, when we had that news of COVID, you can actually see that back then, that was actually quite a large drop from high to low. It was around 45–50% of the share price, okay? So you can see how the market then dropped from there. And as consumers all started to move online, creating Shopify stores, you could then see how the boom came into play. What a great move if you caught that during the pandemic time. I know a lot of traders that did, and it was a fantastic move. However, the trade that I want to talk about is not then. It's actually after COVID, when the bubble sort of burst on these big tech companies like Shopify, like Zoom, when they all started to sell off and come back down to lows. The opportunity that we saw in Shopify was in August 2022. So when we started analyzing that, you can see back here just how it started to settle off of these lows. You can actually see that we sort of got a nice bit of support there bouncing off. Technically, that's a weekly level as well, let's not forget. But I just want to talk about this opportunity more from an overview rather than a technical and a fundamental perspective. Let's just look at this from common sense, because you can actually make good profits just through common sense. So I just want to ask this question. Okay, so COVID happened. Did we, one, onboard more customers at Shopify during COVID? Okay. Did Shopify gain large amounts of interest during that period of COVID and the following year afterwards? Because COVID was really drawn out with the masks, wearing them in public, so on and so forth. Businesses were still thriving, very much so, online. When we look at this, after this huge fall that we saw on Shopify, do you think that Shopify was in a better situation after COVID than before COVID? Now, just looking at some simple numbers here, Shopify acquired a vast amount of new customers during that period. That should be pretty much common sense. The amount of sites that were literally flying in, from drop shipping to setting up new stores, clothing lines, online products, you name it. It really did boom during that COVID period. So, simple thought process. Did Shopify have more customers when we went back to work after COVID? Back to the office? Of course it did. It had more brand reputation and more people knew of Shopify. It was integrated into more businesses. So therefore there was more value in the brand of Shopify than when it was before COVID. So if we look at that, the question, what I'm looking at here on the chart is, when price was bouncing off this level, this was actually then trading at the low on the initial shock to the market collapse from COVID. So when you look at this, the low around here was at around $30. So this was the shock that happened to the share price when everyone goes, oh my gosh, what is going on with this pandemic? So many people are dying, countries are going under lockdown. This was a huge impact to the stock market as a whole. So when we look at that, that was the after effect of what happened to this share. And you can see that it was trading at around 31.30. So when we look at this afterwards, do we think that Shopify was in a worse or better place after acquiring all of these new businesses, after acquiring all of this new revenue, and attracting all of these new potential customers over that timeline? Well, common sense would tell you that it shouldn't be trading at the lows of what happened on the initial COVID shock. So it went all the way back down to this 30 range after trading at the highs of here like 170. Absolutely ridiculous. So once we saw this from a technical approach, I just sat there and I thought, the value is there. It's much more valuable now than what it was at the worst case scenario during the COVID crash. This looks like a great long-term improvement, a great long-term share that I want to acquire. Do we think that it can go back to the highs of 170? Maybe not, but can it go from 30 to 60? 100% it can, and that would be a 100% gain. So back then, let's just look at some basic fundamentals behind the business and the value that we saw in it. So at the time, obviously rewinding back to August 2022, we can see here that we had 16 buy ratings on Shopify. There was 12 holds and 0 sells. So that's when we was looking at it. So from a ratings perspective, there was a lot more people interested in buying Shopify than there was selling. And rightly so. Why would you? I mean, from a common sense perspective, I was all over this. It made sense, and I just wanted to make sure that the numbers stacked up. Now let's have a look at the price targets on an average consensus as well. So at the start of August, you can see the share price was at $37, okay? We bought at the end of August, which is fantastic for us. We managed to get down in that $31 range just going into September. So fantastic positioning. However, when we look at what the average consensus for a price target was, back then it was $73. Now, simple maths again, buying in at 31, the average consensus is 73. Let's do some simple maths, that's well over 100% gain. From a common sense perspective, more people are adopting online businesses, more people are staying online, more businesses are going global, drop shipping is increasing massively. Overall, we're seeing a huge amount of attraction here to online businesses. Make complete sense from that common sense perspective. From a broker ratings, we've had 16 buys, 12 holds and no sells. From a valuation perspective, we've seen it come off of its highs from over $170 all the way down to the lows of the COVID crash of $30. Using simple fundamentals and common sense and a long-term investment approach can equal these results. Absolutely insane gains. So overall, when we bought at these lows, we'll then monitor the broker ratings, how they see that consensus changing over time. So you can see here through me scrolling through, you can see the National Bank Financial back in 2023. We're starting to increase that target from 60 to 80. So again, increasing it huge. These guys here, Atlantic Securities, increasing it from 55 to 65. Overall, again, increasing that price target. Oppenheimer, boosting target from 70 to 80. These are all beautiful things for us to keep monitoring whilst we're holding this position, and it's increasing and going further and further. Credit Suisse changing their price target from 53 to 55. You can see these guys improving from market perform to outperform, $76 target. Scotiabank looking very good here, boosting target 60 to 65. And as long as you can keep monitoring what the big players are doing in the overall market, you're going to be in a position where you're actually riding the wave of top tier investors rather than the retail side. And this is a simple way of how you can look at a stock's future predicted targets from respectable firms such as Credit Suisse, such as Goldman Sachs, such as Scotiabank, such as Oppenheimer. So Bank of America increasing from 65 to 70, it's a 19% increase, rating outperform. And you can see how these carried on increasing of where they would go. You can see even up to current date here. Even now, $80 to $100 increase. CIBC, $82 to $100. 65 to 90. You can see how they're going. And then they start looking like they're going to start decreasing in their expectations. This is why we're also out of the trade. You can see how individuals like Piper Sandler has moved to underweight, and you can see that they're decreasing what their outlook is for this stock. When they are decreasing their outlook, we want to be out. Overall, we've made over 120+% gain on Shopify. Absolutely fantastic returns. So overall, by tracking what these top tier banks such as Goldman Sachs, Barclays, and all the other firms are doing, what their ratings are, what their outlook is, what their price targets are, we want to be operating at this level. And this is a simple way of how you can do that. Soon as they start decreasing their outlook, it's time to cut the position. Well, you can see our entry is in at this level over here, which is at the end of August, 29th of August. And we went all the way up to around here. So we exited about 2 to 3 weeks ago on February the 12th. So actually pretty much calling the fantastic highs. You can see where the student, let's pop it up again, the final stage. You can see where the student here is closing their trade. You can see the settlement date at the bottom. What a fantastic exit. Obviously it's sold off a little bit. And this isn't to say the stock has got a large amount of room to go. But at the end of the day, when is a good time to take profit? Let's be honest, making over 130% on a position, absolutely staggering results. So if you want to be more involved in how we pick stocks like this that make over 100% return, then I'm going to give some of you my free entry into my weekly lessons. You can see the link in the description. Come and join me. I'm going to choose 10 lucky YouTube subscribers to join me in my access. And you'll see exactly how we break down the markets like this and find great opportunities. If you've enjoyed this video, make sure we hit that like and subscribe button. And don't forget, make sure you utilize broker ratings when you're reviewing your stocks.